Hello, investors and traders, and welcome to the Midweek Market Report. I'm AJ Monte, Chief Technical Analyst with StickyTrades. And yes, we had another very interesting day where bad news for the economy is turning out to be good news for the markets. CPI numbers came in a tick lower than what was expected, but the retail sales numbers came in way short. And you can see here from the Forex factory, the numbers came right out there at 0%. Now it was forecasted at 0.4%. If you're interested in picking up this website, the link to Forex Factory is in the description box below. But look at the Empire State Manufacturing Index. This was a blowout to the downside. And so we're looking at negative numbers again, turning out to be bullish for the market. But I will tell you that there's a lot going on here on this chart that you may not see. I will be talking more about this on Friday, but I'm going to be referring to the fourth tenet of Dow theory, which states that the averages must confirm each other. This is a snapshot of what happened to the Dow Jones Industrial Average on a minute-by-minute chart as compared to the Dow Jones Transportation Average. And you can see that the Transportation Average was trending lower. That is what we know of as a divergence. In order for a rally to sustain, or for at least to be considered an upward trend, you have to have the transports rallying in line with the industrials, and that's absolutely not happening. Now, my charts look a little bit different. I spent the weekend and most of Monday trying to get them back in order. Schwab migrated the TD clients over to Schwab, and when they moved my charts over to Schwab, it's hard for me to even say this, I lost 15 years of data with regard to my price targets. I had collected price targets, which were those diagonal lines that I leave on the chart. Now, the good news is Adrian on our team, who is a programmer, has been tracking, has all of my price targets logged in. So we did not lose all of the data. We just lost what it looks like on the chart. So I had to go back on Friday, and I have these green horizontal dotted lines that are the targets that were established from last week. And so we did not drop down, but I'm going to zoom in there to show you what's going on. We gapped up, and now we have two gaps below the market. We have negative divergences on the CCI, and we have a slightly higher volume. We could go a little bit higher tomorrow to test the resilience of any of the bulls that are coming in today on the negative news. But I will tell you that towards next week and the end of this month, we have not yet seen the sell in May go away crowd. I still think we have 2 weeks of that to occur ahead of us. And so I'd be very careful, all you bulls out there taking new long positions. I'm keeping that downside target in place at 379.61. And for those of you who are members, you'll know that while my long-term outlook is extremely bearish, and I'm probably at the very most extreme to the downside with regard to how most analysts are looking at the market, but we do take long positions along the way. For those of you who are part of our Matrix service, hopefully you got that buy alert that went out today. And I can't mention the stock, obviously, but I can mention the big score that we had in GME because that trade notification has already gone out. Our members heard from me on Monday, and I was talking about buying a put spread the following morning. The market opened here. Let me zoom in here. The market opened on GME right at the high and continued to get pounced. So any of you members who got into that put spread are doing extremely well. And what you see here in GME is exactly what I expect to see long term for the general markets. This is just a small sliver of how that extreme bullishness pans out in the end with extreme corrections and even reversals. I'll spend more time on Friday talking about how to draw fan lines on your chart so you can get an idea where the trigger points are. But let's get back to IWM now. We see a hanging man right there, and we have the oscillator showing negative divergences. CCI is overbought, but you can see we have a lower high on the CCI. Gap below the market, wide divergence from that moving average. We didn't have an expansion of the volume on the upside. It's pretty much flat from yesterday, but that hanging man right at a resistance point tells me that the sellers are most likely going to start to move in on the next pivot lower. So that's IWM. Downside target still in place at 198.95. Moving on to the Qs, which is basically the tech sector. We see higher volume on the way up. I think that one could go a little bit higher, but I have my target still set at 425.73, which is right around that gap fill level right there. So option traders who are part of the super spread crowd, you'll be hearing from me soon enough about what to do with those put spreads. But right now we're holding tight. I'm not going to be selling these puts at a high or at a resistance point. So we want to be able to collect more cash on that. I don't want to go too far down that road because that's what members pay for. But my downside target on the Qs is still 425.73. Looking at SPY, which is the S&P 500 ETF. Again, duplicate of what we just saw in the Qs. Slightly higher volume, negative divergences, wide divergence from the moving average in the price, gaps below the market, and I still have my target set on the downside for SPY at 501.22. Let's go to the VIX because many of you know what I talk about with regard to gaps. Well, on Monday, the VIX gapped up with that green candle. Guess what happened today? The gap has now filled. So we are still left with an upside gap on the VIX right up here around the moving average of 1470, but I have an upside target still in place at 1838 on the VIX. Mark my words, you will see the VIX at that level. The big question is when. Everyone wants to know when. That's the biggest question I get. When is this all going to happen? Well, give it time. You have to have patience. We're not day traders. If you are, you're not going to get the information that you might be looking for. I'm a swing trader. We do have investors that look at what I'm talking about for the longer term, but mainly our audience are swing traders looking to make money on these up and down legs. So again, the VIX downside gap has filled, and just like this one, the gap filled back here, down here, the gap filled. And what happened after these downside gaps filled? Well, the VIX rallied shortly thereafter. See that? After this gap filled, we had a little bit of a pop. Now this gap is filled. I think we're going to get another pop. So you bears out there, be very patient. Make sure you're paying close attention to the charts. Follow the signals. Follow your trading checklist. And tonight from 6 to 7, I'll be going through my rapid fire stock analysis. That's exactly what I do every Wednesday from 6 to 7. If you're interested in participating in that, go to StickyTrades.com, and I'll see you at 6. Take care.